warm welcome to our forum once again, sir, and thanks for agreeing to doing this. So, so to start with, sir, would request an opening note from you. If we have to bifurcate the discussion in three, like pre-COVID thing, during COVID, and at present point in time when the COVID base appears to be away from picture as far as diagnostic companies or pathology sector is concerned. Over to you, sir.
Thank you, Prince. And I think I am back almost after some 6 months period. There was nothing much to keep on talking same thing again and again. I thought market will improve. Of course, what is happening in the laboratory floor is not exactly what is happening in the market. Investors are at times gaga with the stock, with an industry, with their own calculations, and it goes up. And then when they see some kind of, I don't know what kind of calculations it is, then it goes down an all-time low. So all-time high to all-time low should not happen in a matter of uh, 45 days to 90 days. But then COVID was one such problem which literally didn't give any clue either to the promoters or to the stakeholders in laboratory industry what to do. Then there comes a day, that was March 24, 2020, everything is closed down. So the non-COVID completely stopped. Then comes PCR as a test. Believe me, within 6 months' time, PCR is the single largest revenue earning test in the laboratory floor. We never expected that to happen. And PCR coming in, compensating for non-COVID business, not only compensating, exceeding the non-COVID business. And especially in peak two, there was such a huge distress. People can't travel without a PCR report, and a kind of pressure was there for corporates. Please screen if you run an office. So I think that period was extremely painful. The capacities, whatever could be increased, could not meet to the need. And suddenly, because of some kind of, I am a scientist, but I don't truly can reason out why the first peak was mild, no oxygen problems were there, no D-dimer demand was high. But in the second peak, not only RT-PCR test volumes went up, the lot of coagulation markers suddenly was in demand. So I think probably people didn't expect that there will be a respite very soon and very fast, and literally speaking, it came down. So all the diagnostic scripts were at its all-time high somewhere in the first quarter end of 2021, some 10th month after the onset of COVID. And then onwards, it never went up. Again, all machines became empty, all floors like a booth bungalow, and all reagents going waste. And the way in which the COVID markers, COVID comorbidity markers were in demand, they were sold in block. They were made by manufacturer thinking that this is the biggest opportunity. Trust me, worldwide, 80% of the RT-PCR machines are for sale and no one is there to buy. 80% of the RT-PCR laboratories are just put on the light to show some visitors that there was once upon a time this floor was very busy. Having said that, the share prices which came down, I think came down along with a lot of other market sentiments, lot of big IPO'd companies which also was having a premium listing also went down. I think all of you as investors might have witnessed there was a distress in the startup ecosystem. Unlisted companies listed for IPO, all or majority have withdrawn. A lot of things have happened. But having said that, is that a distress in pathology industry? Is that a distress for investors in pathology stocks? The answer is yes. The distress is because once it was a darling for many investors, people have bought Thyrocare shares even at 1400 rupees. The open offer was at 1300 rupees. Many of my close relatives also have bought. In fact, they asked me and then bought. But having said that, all of them are today languishing at 420, 30, 40 levels. So if you ask me, did you know it? I would say it's a surprise, it's a shock. Even for me, though many people tell me Velumani was the visionary, I didn't expect the stock to stumble down. Not only the one which I sold, the entire industry. There is no single player who withstood the challenges. So there is distress for shareholders. All those who bought it at 1000 plus are today are wondering should I go out or not? And there is one more distress, that is all those who see today it is below IPO levels. Should I buy it now or not? They are also in distress in the sense, will I miss the opportunity? Will it take next 2 quarters, 4 quarters to come back to some original uh, mm, all-time high? It will take even 2 years. That is my belief. Gone so low, it may take 2 years to become whatever all-time high values are there. So that's a distress for the players in the mm, mm, capital market. That is the invest. Floor has distress. Floor has invited too many competition because of COVID. All hospitals who never thought they would be in diagnostics, they have all taken NABL approval, created the floor and put up the PCR laboratory. All small pathology laboratories also went ahead and did it. So if you ask in the country, the number of players, number of competitors for doing a special test has suddenly surged. Now, they had surged, but the COVID has given up. So they all have invested. Now, COVID business will not come. The floor is empty. So they all bought thyroid testing machines to all machines. So they people who were traditional pathology, they had RT-PCR added along with that. There were some people who did not have traditional pathology laboratory, but they started with RT-PCR, then they are into a kind of competition with all. So that distress is too many players in the laboratory side. A lot of corporates have jumped in. Big names are all telling we have huge dream, huge ambition. They have picked up huge floors and they are all doing, thinking that there will be a huge market and there will be a game for everybody to play. So, too much of demand and not that much of supply. So, that is one big distress. Second distress, there is a invasion by some Chinese brands in the country. The European brands were all costly. They were making big machines, and these big machines are not affordable for small guys. Each crore is the kind of pricing for the European brands. The Chinese brands have come at each machine around 20 lakhs. So they are in fact disrupting the traditional diagnostic vendors whom the big players were using. Because of that invasion, there are too many players investing, maybe up to 1 crore. If they put in, their laboratory is ready, fully ready and functional. So vendors market getting disrupted. In a fear, European brands are also reducing the rate. Their machines are costly, but their reagent cost, they are trying to compensate for the costly machine. So today it is absolutely both from the vendor side and also from the player side. It's all-time low in prices. So this has become the second aspect. The third aspect is the sick care industry is not growing at all. For some reasons, the sick care industry growth is far less compared to the wellness industry. Or I had made an Arogyam as a profile at that time. There was no one was in wellness industry, and I had created different packages of Arogyam. Today, all players have copied exactly the same profile in different names. So that section is growing. The conventional sick care industry is not growing. Now, in fact, if you ask me, had people not ventured into the wellness profile today, they are least likely even surviving. To that extent, the competition. So the industry growth is not fast. The number of players growth is very fast, and that has been another stress. So these are the stress not for one player, it is for the entire industry. In that way, there are two models in diagnostic industry, three models. One is the hospitals who don't worry about anything what is happening around. They have their own captive patients. They will pay whatever are the charges. They are not permitted to get it done from elsewhere. So they have luxury of value. They don't have the luxury of volume. The second kind of player, the conventional players, the top three players in the industry, that is Lal, Metropolis, and SRL, they have a business model not like hospitals, not like Thyrocare, but somewhere in between, and they have got lot of walk-in patients. They get a fair, good price from the walk-in patients. They don't look for interlaboratory business to begin with. They hardly any interlaboratory business. I think over a period of time, to keep the machines running, they started accepting some interlab businesses. Thyrocare model was purely interlab business to begin with, except their Arogyam profile, all the remain are only lab to lab. But today in the industry, there are some 25 players who do exactly that. And according to me, there is no disruption in the hospital business in the laboratory side. I think the top three players are still doing very well, and the remaining players are getting disrupted because the B2B market is the most disrupted market. Having said that, is the share price showing anything about declining in the PAT? The answer is no. If share price is multiples of earning, I don't think there is a justice. The companies, all of them are doing, if not gaga post COVID, they are at a very good level compared to what prices they had earlier. Today, their PAT is very good, but prices are very low. I have talked literally 15 minutes, giving an overview of what is exactly happening in the floor as well as in the market side. I would be keen to answer questions if they are presented. Thank
Right,
you, Prince.
right. Right, sir. So, sir, last time when we spoke, so basically we talked about the organized and unorganized side. So we talked about that there is a lot of scope in for both the players. For like the organized players which are already there, they have scope of expanding, right? So, do you think the demand which you think there is, there is oversupply and demand is not matching? So, sometime down the line that will match up, and obviously, when it comes to capital markets, there is an extrapolation on both the sides, extreme pessimism and euphoria. So are we near that extreme pessimism, or not exactly in the price, but the sentiment basically?
I think in my teenage, I used to hear a story of Tenali Ram who has given a very hot milk to his cat, and that cat never drank milk again. I think the last 24 months, if you see, if a stock price has gone down 65%, almost all diagnostic industry stocks have gone down anywhere from 60 to 70%. Who will touch the share? There is a huge fear. But I don't know what the calculations, how do they calculate? When the price of a share is already overpriced, people still buy. When the share price is underpriced, it is very, very low. People are not touching. This is something which is very difficult for me to explain because I've been an entrepreneur side and today only I'm looking at from the investor side. But if you ask me, it's unclear to me as a man who knows the industry that is pathology specific and is having money to invest, but I am not motivated to invest because it might languish like this even for 2 more quarters, or it can pick up and can rally and even can go to all-time high even in 4 quarters. So it's very, very difficult for me to tell what is likely to happen, and I don't want to give any wrong signals to people who listen here. We only are analyzing, we are not giving any guidance. But answering to your question, I don't see any clarity on what you call a share price movement. But I do see the market with too many competitors. In fact, a lot of money has come in healthcare industry after onset of COVID, especially into diagnosis. And when it went all-time high, it was looking like diagnostics will be the only industry which will give you the greatest returns. So lot of money has come in. Lot of money has come in last 10 years. There were 3 listed players. Then it became 6 listed players. The last decade has seen many investors showing interest in investing in small laboratories somewhere from 4 million to 10 million dollars. And that kind of laboratories were dozens and dozens in each part of the country. And then came COVID. And then in COVID, again, people felt if the stock price of all the companies have hit the roof, everybody had felt that investing money into small laboratories is a very good opportunity. So today, there are too many laboratories, funds in hand to burn. But I wonder, is there they are really growing the industry? Are they really helping the common man to get the tests at an affordable cost by giving advertisement that thyroid test is 100 rupees, lipid profile is 100 rupees? Sometimes in the page 3 of a newspaper, quarter pages, I have no idea can they sustain what they are really showing or presenting. Answer is no. You cannot do these kind of services at that kind of rates for even couple of quarters. So it's a lot is there. It's not easy for me to comprehend, but it is likely it will grow on its own pace. By pulling it, by pushing it, it cannot grow.
Right, sir. So, and since you spoke like even a person with 1 crore capital can form a lab, as such, there are no entry barriers. So, on these lines, do you foresee any changes on the regulatory front so as to ascertain some quality, or maybe the initial cost may increase on that front, some kind of, or it is not going to happen? I mean, any thoughts on that, sir?
Anything in such a big size is very difficult to regulate. This is a country where the civil courts and criminal courts are struggling with 20-year-old cases today. This is the country where policies are not adequate enough to take care of the law and a kind of common man's problems. And this is a country where healthcare is not adequately available. And this is a country where 100,000 laboratories, I believed, is there, but many people tell it could be even a thousand laboratories. But somewhere around 500,000 locations where testing is done. We hardly a 500 people involved in regulatory role. How do you think these 500 people will be able to manage 500,000 laboratories happening? You can't stop them overnight. Whatever is happening also will be difficult to continue. I think regulatory will find it extremely difficult for the size of the country to bring in some regulation. But having said that, they will certainly try, and it could become 10, 15, 20 years to see 50 or 60% of the reports reported in the country are through accredited laboratories. As of today, it is not single digit, even less than 5%.
Right, sir. And sir, does advancement in technology such as AI and automation, can it impact the sector big time, or it's like it will the technology enhancement will go hand in hand with the growth in the sector?
I might sound a bit of disappointing, but let me tell you, nothing exciting has been happening in the diagnostic industry literally for the last 40 years. I said it in one event, and one very hi-fi pathologist objected me saying that microscopes have gone, and you are getting cell counters today at a cheaper rate. So it's not a newer technology. It's a technology we bring. It is easier to do. Cost wise, it is today affordable. So that's the hematology side. The immunology came exactly 50 years back, and for the last 50 years, nothing exciting have happened in immunology, except that vitamin D came 10 years back, and vitamin D gave some kind of boost to the turnovers of the laboratories. And okay, let me put it this way: there were three Ds. 50 years back, thyroid came. That's a D, thyroid. It gave a good boost for almost some 25 years. Then vitamin D came, the second D. That has given a next 10 years, and that also today has become a kind of routine test. Then came COVID, which did not even remain for more than 12, 15 months. So that D also has not been supporting. There are new exciting molecules are not happening in pathology industry as of today. Now, this is the reality from the flow side. Now, if you talk about AI and all those things, that is not truly going to revolutionize pathology as much as radiology. In radiology, interpretation of CT, MRI, PET CT, lot of times pathologists are spending, and that is something where it is believed that 90% of the scans can be auto-reported by AI. That means only 10% AI will tell this is questionable, and that is what radiologist will take care of. So that is likely to have some kind of uh, impact. Otherwise, in the laboratory industry, AI don't see having much bigger role. In the Western world, there are sequencers which are doing genetic tests, and the sequencer, each of them costs around $1 million. And in India, hardly some two or three players have sequencers. And sequencers, since it is very costly, no one is venturing in. Sequencers players are charging again too high. Thyroid came, people charged too high. Then thyroid rates subsequently were affordable. Vitamin D came, it was also very high. Then subsequently D rates also has come down. And you all know what was happening to COVID. 4,000 rupees was what was the initial charges, which finally came to 400 rupees. Now the genetic tests are costing roughly around 40,000, 30,000 per head. I have a reason to believe if there are entrepreneurs who are getting in and disrupt the prices, that price can come down as much as 6,000, 7,000. But will that happen? When it will happen? And will there be medical community who will consume that? But trust me, that has strength in it, that has a lot of information in it. But in the Western world, where they don't mind spending any amount, these machines are getting business. In India, price decides consumption. So that is one bottleneck, I believe, which I think by 2030, the country may have 100 sequences.
Right, sir. Sir, any thoughts on gene-based mapping for onco diagnostics? And are there any key players? And what's the competition in the space? If you have any view on that.
See, the genetic tests are done by a dozen number of players, and not volume is very high. One or two players are doing a volume of roughly around 100 crores, and remaining people are all very low in volumes. I think whole genome sequencing is something where you can sequence your complete genome, but then complete genome will give you complete data, but it won't give you complete inferences. So, what is believed today by many in the Western world is do once sequencing, because your DNA will not keep changing every day, lifelong, your DNA will be your DNA. So, people can search for once DNA data is there, it is like a library. You can ask whether this particular problem is there. It will tell that particular problem is not there with you. This is about the genetic, or this is the predisposition of a particular disease. Similarly, you can also sequence tuberculosis gene and then tell whether the tuberculosis gene is resistant to drug A, drug B, drug C, and whether it is curable, not curable at all, because some of the tuberculosis genes are resistant to majority of the drugs. That information can be obtained. And if you again do a whole gene sequencing, you can find out which virus, which bacteria is involved in a disease process. Having said that, in the Western world also the volumes are not too high for their per capita income. If a laboratory has 1,000 crore turnover there, in India a laboratory has only 15 crore turnover. This is the ratio of consumption of genetics in the country compared to US.
Right, sir. So, sir, one question is around what stops Dr. Lal from expanding in the south? North is already saturated market for them.
See, expanding markets are not that easy, especially when, once upon a time, Thyrocare used to get sample from Guwahati, from Trivandrum, and from Srinagar, because those days technologies were not available and people even waited for 3 days to get the result. That was only in year 200 to year 2015. Afterwards, the technology has gone to every nooks and corners. So it is not that easy for you to impress outsider going and telling I can do it better. The machine remains the same, and the cost literally is not now today too good for big players and small players because the vendors got disrupted. So if you ask me, they are present in South. I have seen in the last 1 or 2 years, almost in Tamil Nadu, some 10 cities, 15 cities, they are present. Only thing is, in the North, the brand is so powerful. You can never compare what is per store revenue compared to North and South. The North stores may give, let's call it as $100 revenue. The South stores may give only some $15 revenue. So when the revenues are not there, it's very not motivating to keep putting more stores. So it is not that all South players are present in the North, and it is not all North players are present in South. To some extent, there is a distribution. But this skewed distribution will continue. I think it was only SRL and Thyrocare which had a distribution all four parts of the world, fair distribution. But then their business model to begin with itself straight national. Otherwise, Metropolis in the first half of their business period, they were only in West, and Lal was only in North. Then they felt that they should go also all over the country. Today they are present all over the country, but the numbers, if you look at the uh, annual numbers in the presentations, they are weak because they are not weak in other markets. They are very strong in their markets. Let us interpret it that way.
So, sir, although you have explained it previously as well, volume is something which can help as far as like revenue is concerned. So basically, my question is the pricing power is not there in the sector because like if over a period of time the raw material cost increases, so it is very difficult to pass on and increase the cost of various tests, right? Because there is so much of competition in the market. So going forward, the same trend will continue, and what economics the companies can do so as to improve on the margins. Although margins are pretty high at this point in time, also.
You know very well, brand is a brand and brand commands a premium. So that comfort is there for the large players. If there is a mean realized revenue for the, let's say for a lipid profile for branded players, if it is 100, for unbranded players, it is only 60 or 50. So that brand premium still continues. Not that everybody is price conscious only, not brand conscious. And the brand sometimes is at a state level, sometimes is at a district level, sometimes even at a town level. And that brand, people buy it, but the brand guys hardly have volume, as, except the top three who also have volume because they are present in all cities. So branding is very important, and unbranded players is very difficult to ask for more. I think this is true in every industry. And power of pricing is still with the big players, but the big players will not be able to price it comfortably for getting the interlaboratory business. This industry has two segments. One is customer paying, another is a laboratory paying. A customer paying, if a brand is more in a customer paying mode, they today still are very comfortable. Those who are in the interlab business where the laboratory man is paying, he bargains for the rate. He asks, मुझे वहाँ 200 रुपया में कराता हूँ. How can you ask me to pay 250? To that extent, that is negotiated. Though the patient might have paid 1,000 rupees for that test, the laboratories who are collecting blood but do not have facility to do the test are making a good money. I think that's to be understood. The players are not making that much money per specimen. Players are making in volume, but the people who are in between connecting the patient and the major brands are enjoying a fairly big margin. And this kind of margin was not existing 10 years back, 15 years back. So these are all in the inner currents in the pricing side. But overall, if you look at the numbers which are presented quarterly or annually by listed players, you will see some of them are commanding premium in terms of per patient revenue.
All right, sir. So, the market sentiment, if we keep that aside, the current valuations of the companies in the space. So, had the sentiment not being so negative, what comfort does these valuation give you if you think from a point of view of an investor?
I said almost today, 6 months back, this is the right time to buy the diagnostic stock. But if you ask me, it has not appreciated in 6 months. Even today, I will tell it is right time to buy. When it will restart moving up is very difficult for me to tell. In between, it looked like it rallied some 10% high and it came down 9%. Like that, it has happened with all listed stock. In my opinion, if you are a long-term investor, it is the right time to buy. If not in 1 quarter, 2 quarter, in 3 years, 4 years, it has to come back to its all-time high. कभी आएगा वो नहीं पता, but according to me, it's motivating today from an investor point of view to pick up the diagnostic stock.
Right, sir. And sir, if I ask you about the ancillary to this sector, so playing through the ancillary as far as investments are concerned, so would it be a wise decision, or it's like if there is pain in the sector, then ancillary will experience the pain in the same amount, maybe, or maybe likewise?
Which one you call as ancillary?
So basically, the companies which are providing the, the reagents and the tubes and kind of, if there are any listed
No,
players.
all there are not many big players in the reagent side, instrument side. Still, in India, there are only some 2, 3 companies which are doing a kind of manufacturing and of reagent or instrument. I would put it, unfortunately, as on today, I am talking about 2023 also. 70 to 80% of the reagents, even I will go ahead and tell 90% of the reagents and instruments are imported only. And the dollar was 50 rupees when 2010. In 2023, it is 83 rupees. How do you expect the industry to truly have power to do business? So, this is a very big deterrent. Having said that, I am of that opinion. This industry will have to do good. According to me, an all-time high is either 4 quarters away or 8 quarters away. Ancillary industry is not like automobile industry, not like textile industry. The diagnostic ancillary industry is too small, and they are only 3, 4 players have a sizable 300, 400 crore. All the remaining are at 25, 50 crore turnover.
Right, sir. And sir, the B2G model, do you think more player can enter and disrupt the space also, or like, it is more or less same as compared to the B2B thing?
B2G has a peculiar problem. I will tell you, all politicians think they can bulldoze the laboratories to do at the lowest cost. And in greed, all players sometimes bid the lowest also. After taking that money, after getting that money, after fighting with bureaucrats for 6 months, 1 year, doing that business has huge pain. And they put a rider telling that your results should come within this many hours. How to produce result in that many hours, unless you are putting up laboratory like a number of railway stations in Mumbai city, you can't put that many laboratories. If you put that many laboratories, volumes per laboratory is not that high. And if you don't have volumes, you can't service at that rate. So, yeah, literally suicidal government to look for a rate, and sometimes they tell this is the rate. Who want to pick up? That's too much of a kind of slavery there. But still, people take it because it makes some sense. And if somebody could focus and deliver the result, they make some money. We did have some government business, and that did give us adequate profit because we had a very lean system. But having said that, I think people have burnt their fingers in COVID. According to industry estimates, some 5,000 crore of outstanding is from government for COVID payments. The COVID has stopped and they have not paid. Now everybody is walking every day and the government is not interested in clearing the dues. So then once this fear is there, will people pick up government business? Having said that, still people are picking up. But if you ask me, will that enhance the balance sheet significantly? I don't think. EBITDA of non-government business could be 30%, 40%. EBITDA of government business can never be more than 15%.
Correct, sir. So one call for our attendees. In case you have any questions to sir, please feel free to send in a speaker request, or you can simply drop in your question in the comments. So this we already covered. So, sir, basically, brand can command pricing. That is fine. But what do you think? Like making a or building a brand, how much time? I mean, obviously, we cannot say this many years. Or what could be the? I mean, how easy or difficult is to create a brand in this space, and what challenges do we face in doing that? I mean, if you were to tell from your experience.
The easiest way to build a brand is become the first in the industry. If you look at the tallest brands in the pathology industry, continue to remain Lal Metropolis, because they were Lal is 60-year-old brand and Metropolis is 40-year-old brand. So be first, you will be the brand. Now that can't be done now. That route is not available for everyone now. Second one, be tall, you are a brand. That means you need to do a lot of hard work to get the attention of the market and produce a lot of volumes. Then you are also a brand, because the guy who produces volume has a good quality without which he can't get volume. So that is how Thyrocare became a brand, and that is how SRL is a brand, because these both SRL and Thyrocare started in 1996. Then I don't think subsequently really there are big brands, but if you ask me, they are all present in some parts of the country, sometimes multi-state level in south, multi-state level in west, sometimes single state only, and sometimes single district only. Brand is building is very costly affair. If somebody is today paying too big a price for a brand, it is not for the business. It is to build a brand is not easy, and people buy the brands. And that is how, if you analyze, even I sit and analyze in my entire valuation on my exit, what was business valuation and what was brand valuation. In my opinion, it was 50-50.
Right, sir. I see Aditya sir. So Aditya sir, if you have any questions on your part, you can join. We had an exhaustive discussion so far. And one last call for other attendees as well. So just in case you have any questions, please ask. So sir, how good we are on time?
I think we can close it to 10 o'clock.
Right, sir.
If there are, if the
Sorry, can I ask a couple of questions? Do we
I
have time?
sure. So because you were there, I told 10 o'clock.
Thank you, sir. Thank you so much. Just a curious mind, that's all. Dr. Velumani, I just wanted to understand from you. So you're talking about the brand bit, right? So building a brand obviously takes a lot of investments and a lot of time. Um, but if you look at, what, let's say, Tata 1mg, right? So people know Tata. People may not know 1mg, but they know Tata. And when you add, let's say, Tata's name to 1mg, in your opinion, does that lend Tata's credibility to the brand, and hence would help them to ramp up their pathology relatively faster compared to, let's say, nobody starting a similar platform? Same goes for, let's say, people like Lupin Diagnostics or people like Aster Diagnostics or people like Pathkind Labs, where the brand is already known to the doctor fraternity for whatever reasons.
Yeah, there are two kinds of brands in the diagnostic industry which people can use. One is their consumer brand, not a medical brand. So if you look at the current entry into the field, there are two kinds of guys. One is nothing much to do with medical. So 1mg Tata is not medical as a brand. Reliance is not a medical as a brand, and there was a bit of fear for people. Adani is getting into diagnostics, but I think last couple of quarters, Adani's name is not heard much. But if you look at all the three, have nothing to do with medical as a brand, but they have a huge consumer connect and a huge investor connect. So that will have certainly some positive aspects of the brand journey. But the brand, to begin with, it is a brand that doesn't mean it ends up as a successful brand. The journey has to have elegance of quality, cost, and speed. And it's very, very important. All the three have to be there. You are a wonderful quality, but if you are not fast enough, you are not really liked in the industry. Your quality is good, speed is good, but cost is too high, then also there are challenges. So the final brand will be the one who delivers the best quality at fastest rate at the fastest speed and cheapest rate. So this is the journey. Now there has been a path kind, there has been some more players who are predominantly started as pharma, and they are into diagnostics. They have a doctor connect. They are remembered by doctor by the brand of medicine which they sell. So they would get some advantage. But all these players are too late to come inside because the industry got disrupted. Now, in the disrupted new environment, how do you work on it? So that's a challenge. Let me tell you, the percentage EBITDA in your balance sheet depends upon number of hours your analyzer is running on the floor. In other words, the money profit made by a taxi is directly proportional to number of hours the taxi is running. So big player, branded player, it will not make difference to the balance sheet until their machines are running 20 hours in a day. I think I differentiated when I came in the industry, machines were running for 3-4 hours, and then a price disruption gave volume. Volume gave rise to machines running for 20 hours. And today, anybody who is running machines more than 10 hours is making profit. Anybody's machine running less than 10 hours, they are not making profit. If brands can get volumes, they are successful. Will volume come because of their brand name? May take time, but it will come. It is a matter of 5-10 years.
Understood, Dr. Velumani. Very, very clear. Um, the other question I had on this was, if you look at Thyrocare today, right? So their EBITDA margins have significantly declined from what it used to be when you were in charge. And what we understand from the current management, at least, is that they have spent a lot of money, which is recurring expenditure on NABL accreditation, which they say can be around 5% of sales. They have spent a lot of money on hiring talent. They're paying a lot more salaries, maybe, and they've also expanded in terms of the number of pin codes that Thyrocare as a company was covering, in your days, and now the number of pin codes that they are covering. So I just want to understand from you, do you think being NABL accredited and that quality stamp makes a big difference in terms of what kind of volumes they can achieve in future? And also, if expanding pin codes beyond what Thyrocare already had when you were there, would that be really an helpful endeavor? Because I would imagine under your supervision, Thyrocare was already present in, the significant pin codes, the pin codes where there were significant volumes.
I think that interview you were there, and I heard your interview also. That was in some channel. I heard it. Every new management, especially when the management changes, there will be a lot of changes in the organization's structure, organization's goals, and organization's perception about what are the bottlenecks. Now, every organization will perceive there's some bottlenecks and will try to sort it out. That may incur a lot of expenditure, and if that expenditure is reducing the EBITDA as of now, and it is going to get you the returns, that is worth investing. And after investing money and eroding the EBITDA, still it doesn't give growth, that means it was wrong. So that's the only way to tell what is right and what is wrong. No two leaders will agree with the same. This problem is same. Everybody perceives the problem in their own way. When I was running, I didn't see anything more than 15 laboratories in 15 major cities geographically placed to give a overnight report. But then I used to get pressures from my field staff. Sir, we are not giving the same day report. Now, 27 years I was put pressure to give the same day report. And I just put my foot down and I told I don't need that business, because that involves a lot other hostings, lot other challenges. I am not going to look at it. I am dealing with metabolic disorder. There is no one dying metabolic disorder if you don't get the report in the evening. ये मदरासी अपना ही दिमाग से अटक गया, उससे निकला नहीं है. Similarly, a lot of things which many people, all my peers are spending, I knew that spending is not going to improve my quality. That spending is not going to improve my speed, and that quality is going to determine cost and balance sheet. So I stuck to me and stuck to it, and I retained a 40% plus or minus 2% EBITDA for literally 25 years. That gave me a 25% CAGR for 25 years. I was right. But then subsequently COVID comes. Then subsequently COVID puts you into all numbers totally up and down. Then you need to rebuild it. Now when you rebuild it on your philosophy. I don't say it's wrong, as long as it's going to give results. Will it give results or not? If you spend wisely, it will give results. And if it doesn't give result, that means you are not spent wisely. वक्त बताएगा.
Understood, sir. Very clear again. And sir, again, just sticking to Thyrocare for one more question. If I look at the non-COVID revenues of Thyrocare over the last 4 years, because COVID revenues obviously created a spike over the last 2 years, so I'm just going to ignore that for now. But in FY19, whatever the non-COVID revenues were there, FY23, whatever non-COVID revenue they will do, that number is hardly like a 2-3% CAGR. Now, why I'm using Thyrocare here is an example only. I want to understand from you from an industry standpoint here. Has Thyrocare, in your view, lost market share and hence just reported 3% volume CAGR over FY19 to 23? Or is it that the industry itself has not grown over the last 4 years? And if so, what has been the reason, no matter which of the two is the case?
Aditya, statistics is funny. You can see it from your own angle as you want it. It will be looking right. So there are some same numbers, 10 people will have a 10 different statistical approach to it.
Yeah.
When in 2022, 2021 financial industry, that is financial year 2021, there were a couple of months for entire country, non-COVID is 0.
Right.
Now, you extrapolate it for last 5 years, you will find a CAGR of 2% only. Then put an endpoint at that 2021 financial year. Then to see the next 2 years, you will have a CAGR of 30%.
Correct.
So I heard that interview and I understood. If you want to interpret, you can interpret intelligently to your convenience.
Yeah.
But what I am extremely happy about, in fact, I made my family to hear it. Velumani had a 2% CAGR and got 14 multiples of top line. ये क्या पागलपन है? I thank all the investors who went into coma and gave me what I didn't deserve. Having said that, you should not look at COVID period, any kind of statistics, you will only get misguided. In the long run, by year 2030, you will tend to ignore the COVID aberrations. COVID is an
Right.
aberrations, and you should not truly sit and analyze what happened around COVID to do anything with industry problem or anything to do with the individual brand problem or even anything to do with individual CEO's problem.
Understood. So does that mean, Dr. Velumani, that the industry which was growing at 10-12% volume during your times, the current growth rate in the industry can be similar for the next 5 or 10 years?
I said thyroid was the first one which gave what otherwise was growing 10-12%. Thyroid pushed another 5% of annual growth for almost 15 years.
Yeah.
Then vitamin D came as a support. It's like in the pharma industry, any new molecule only can sustain the top line. It's very difficult, the same molecule sustaining it for too long. Similarly, laboratory also. Thyroid was first 15 years, then vitamin D was next 10 years. Now COVID came and suddenly jumped down. Now what next is going to come only will decide how this industry will be for next 10 years.
No, I get that. My question is just depending on how. So, for instance, the pharma industry has broadly said that the pharma market in India will grow at 10-11% for the foreseeable future. If I were to ask you a similar question, and this is not specific to Thyrocare, specific to the industry, that how would the industry grow over the next 5 or 10 years in India, the way you look at it? Would it be like a 10-12% growth? Can it be 5-6%? Can it be more than 10-12? From the lens that you are looking at it, how what does it feel like?
Believe me, in 12 quarters, it will touch all-time high again.
Mm.
That's all. Rest you have to sit and calculate.
In 12 quarters, you said.
In 12 quarters, it should touch all-time high.
Right. And just to be clear, because I couldn't hear you, it was 12 quarters, you said.
Yes, three full years from today.
3 4 years from today. Understood. No, I understand the confidence behind that. Also, Dr. Velumani, are you still connected with API Holdings? Are you still holding on to the shares that you had, or is that something that we have already disposed?
Holding on to that, again thinking it should touch all-time high in 12 quarters. जिंदगी भरोसे में ही चलता है.
So true. But Dr. Velumani, as a big shareholder, I am sure you are party to some of the discussions that they have. And I know Aditya Puri has become the chairman of the board at API Holdings. Could you share with us a few interesting nuggets? Because API Holdings is an unlisted entity, so no, there's nothing price sensitive also here. But just want to understand from you, what have been the discussions around in API? How are they trying to turn around operations? Because this online pharmacy sort of seems like a business which is run on discounts, right? So, as a layman, it's very difficult to understand how that operation will become profitable, if ever. And I'm guessing that Aditya Puri's agenda would be to turn around the operating metrics of API. So, can you share with us any nuggets of wisdom here that how can it really be turned around?
You have asked me a very emotional question. I didn't want to answer it, but I think since you have asked, I will answer you. The day I got stock sold, I was asked to sign a resignation letter. I didn't ask who is the next MD. I didn't ask who is the next CEO, because why should I ask unnecessarily? The company was running without an MD and a CEO for almost 3-4 months. I didn't refuse to remain as MD and CEO. It is my child. But I was unceremoniously told, you are not told. I have signed That means that's the end of it. Believe me, I am the single largest shareholder there. Neither the board nor anyone there have talked to me any single word for the last 2 years. You are telling you should be knowing all things what is happening. To be very honest, they felt I probably मद्रासी गांव से आया इसको कुछ नहीं पता. Sorry for telling that in public forum, but you asked me and I didn't want to tell. I am a man who talk spade as spade. That's the truth.
That's very unfortunate, sir, that they didn't use your expertise and your experience. That's very unfortunate. So one last question from me, and then I will turn over to the audience. There are a lot of other listeners who must have questions for you. Just one last question from my side. So when I look at the brick and mortar uh, pathology and radiology business, I know Thyrocare never did radiology. In fact, you had a small PET-CT business within nuclear. But now, when I look at some of the pathology players in India, right, be it a Vijaya Diagnostics, be it a Krishna Diagnostics, some of these guys who have more pathology, more radiology and less pathology, I see them doing fairly well in terms of margins and revenue growth. So, like in pathology, volumes tend to be a very big moat. If you have volumes, you can have margins, you can have lower pricing. Uh, isn't radiology slightly different because in radiology the sample doesn't travel, the patient has to travel, and therefore, like in pathology, we look at volumes. In radiology, what should be the key operating metrics that we should look at to understand how well a diagnostic chain is doing?
I tried radiology thinking that I can disrupt radiology like pathology, but I could not do it because of various reasons, including the pathology. What I was doing is a wellness industry. It was not doctor dependent. The radiology is totally doctor dependent, and I could not break the jinx there. In fact, in pathology, to be very honest with you, I did invest only 2 lakh in 1996, and I got, what I got. In radiology, I invested 200 crore, and I lost net worth of the company when I exited was only 50 crores. 150 crore was lost. The most powerful disruptor in diagnostics was me, but the most miserable failure was mine was in radiology. Having said that, radiology industry, on an average, a scanner, CT or MRI or PET-CT, I think leave PET-CT. PET-CT is only running for 4 hours in a day, remaining 20 hours it is standing. MRI runs on an average 12 hours in a day, and CT also runs in an average 12 hours in a day. CT and MRI are making a lot of money. PET-CT guys are not making money because they are not running 12 hours in a day. Having said that, like Indigo, these machines also can be run 20 hours in a day. And only those players who dare to do it, 1 or 2 players are today doing almost 15, 16 hours a day, their balance sheet is very good. So the matrix is a standing machine is a liability and a running machine is an asset. If that can understand, they will keep running it and create a lot of profits.
So the player you're alluding to, which runs at 15, 16 hours a day, is basically Krishna Diagnostics. Am I right?
They are into government business. They don't get a per scan revenue really big. 2
Mhm.
players I know doing a very fair volume is Aarti Scans of South and I think the Pulse Diagnostics in Western India. Other players I don't know, but these 2 players are starting their work at 7 o'clock in the morning and they are doing until early morning 2 o'clock.
Phenomenal. Thanks, Dr. Velumani. Those are all my questions. Prince, over to you and over to the audience.
2 questions I will take, Prince.
Thank you, sir. So there is only one question from Brajesh. So he's asking, sir, your view on the business model of Krishna Diagnostic as they are aggressively tying up with government hospital in most of the cities.
As much as my business model was different from remaining pathology players, the Krishna Diagnostics business model is very different from the rest of the radiology players. But having said that, less per scan revenue and lot of government delays in payment must be troubling them. I don't see from their balance sheet for the last 3-4 years they are doing really something which is giving you a hope that their scaling up is happening at a higher speed. But having said that, they are certainly a different business model, and if they learn fast what can help them in getting volume, or as I was expecting, if AI can come inside, I think that can reduce their operational expenditures. But with less per scan revenue, they must be struggling because it's government business. This is not that I have critically analyzed that space with the numbers, but I believe they have this as the challenge.
All right, sir. Thank you. So Aditya sir, we still have bandwidth for one question, just in case if you have any, or otherwise we wrap up for the day.
No, so I'll go ahead. Velumani sir, does the NABL accreditation versus non-NABL accredited labs, do the NABL accredited labs have any edge in terms of quality or doctor recommendation versus the non-NABL labs in India?
Actually, the common man does not know NABL, and common man does not truly differentiate. But having said that, in the pyramid, top 10% of the population is not common man. He is educated man and he knows how to search for good lab. And that 10% is spending more per capita than the bottom of the pyramid. So if you ask me, an enable accreditation might get you a 10 more percent top line, and in terms of volume into value, and some pricing power, because you can always tell no, our rates are comparable with other NABL laboratories, not a non-NABL. This kind of justification are done. So if you ask me, NABL is not too costly. You need to have space enough. You need to have professionals well trained so that NABL they face the audit. I think people are not actively going for it. But having said that, because of COVID, within 1 year, 2 year, number of NABL audited certified laboratories has doubled. So if you ask me, that's the only accreditation available. And if you want to differentiate, please go for it. Whether it gives really a return or not, the cost is not high, so go for it.
Understood, Velumani sir. Thank you so much. Prince, we are done.
Friends.
Thank
Thank you,
you. Thank
friends.
you.
Prince, for hosting it, and I enjoyed talking.
Thank you, sir. Always a pleasure to have you, and hopefully after a few quarters, we'll again request you for your insights. Thank you so much for your
मद्रास
time today.
मद्रास में क्वार्टर को वो बोलता है जो पीते हैं. So और 2 क्वार्टर के बाद फिर से देखेंगे. Thank you very much. Bye.
I was I was waiting for the punchline, sir. Thank you so much. And
Thank you. Bye.
guys, this session is recorded, and those who joined late may surely listen to it over my YouTube channel. I have pinned a link to the YouTube channel, so if you haven't subscribed, please subscribe so that you can have access to it. Thank you so much. Thank you, Aditya sir.
Thank you. Bye.
Thanks. Bye. Good night, guys.